watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Friday. First quarter GDP beats analyst estimates and surpasses pre-pandemic growth levels.
But soaring debt poses risks to growth. Debt to GDP ratio spikes to a 17-year high in the first 3 months of 2022.
World leaders congratulate presumptive President Bongbong Marcos Jr. for his victory in the 2022 polls.
And local shares plunged below 6,600 on Thursday's trade. That's despite better than expected GDP figures.
And we begin our broadcast with the first quarter growth surpassing pre-pandemic GDP levels.
But soaring debt and the impact of the war in the Ukraine pose downside risks to the growth in the succeeding quarter. Shaila Francisco with the rest of this story.
Despite the surge of the Omicron variant, the country's economy still managed to grow during the first quarter. The Philippines' gross domestic product grew 8.3%, largely driven by the reopening of the economy. But growth in the succeeding quarters will face risks brought about by the Ukraine-Russia tension and pandemic-induced debt. This is what presumptive President Bongbong Marcos will inherit once he is in office. However, his economic plans remain unclear, at least for some economists and government officials.
The problem with the Marcos campaign was that it did not present a clear, coherent program, including a program for economic recovery. Now that he has won, we just have to wait and see.
The best way to address some of these concerns is, as the investors and other analysts have mentioned, is for the new administration to lay out its agenda.
For now, economists say that Marcos Jr. should prioritize forming an economic team within the first 100 days. For its part, the National Economic and Development Authority wants the new administration to immediately address problems on inflation and economic recovery. NEDA Chief Carl Kendrick Chua also said that it is crucial for the new set of leaders to maintain prudent fiscal policy and continuity in various reforms set by the Duterte administration. This includes the rice tariffication law, the comprehensive tax reform measures, liberalization bills, and the Build, Build, Build program.
Well, these pronouncements, I think, are in the right directions. The details are important. How to get it done? As I mentioned, we may agree on the problem, but how to solve it, we have to do it properly. Because everything is a trade-off.
Shaila Francisco, we are One News.
Now, the Bangko Sentral says it will consider the faster than expected first quarter GDP growth in its policy meeting that is on May 19th. BSP Governor Ben Diokno said in late April that they might consider a rate hike in June, but some analysts are saying that the first quarter GDP print helps build a case for a rate hike as early as next week. Diokno said the Monetary Board will keep this in mind along with the improvements in the job market coming into their policy meeting on Thursday.
The country's outstanding debt soared to 63.5% of the economy in the first quarter. That's the highest in 17 years. The Treasury reports that debt to GDP ratio in the first 3 months is the highest since the 65.7% recorded in 2005 under the Arroyo administration. It is also above the 60% threshold recommended by multilateral lenders for emerging economies like the Philippines. In actual figures, the country's debt stock now stands at 12.68 trillion pesos. All right, so much data to digest, all at a time when the country is about to transition to a new administration. To help us make sense of the numbers, we have Manny Ocampo, Managing Director for Equity Capital Markets over at the Investment and Capital Corporation of the Philippines. Good morning, Sir Manny. Thank you for joining us.
Hi, good morning.
All right. Sir, again, growth in the first quarter, zooming past expectations here, even blasting beyond the pre-pandemic levels. Is this a start of a momentum here, or are we expecting this to wane in the succeeding quarters? And what possible headwinds should we be looking at?
Okay. I think the first quarter numbers really represented a big jump because of base effects. It's coming off a low base compared to last year. What I think, if you look at the individual components of what contributed to growth, we're more encouraged by that because you have consumer spending and investments being the top contributors to GDP growth. So those are sustaining, hopefully sustaining things. But will we expect these two types of numbers to come in second quarter, third quarter, etc.? Probably not, but still respectable growth. We figure below 8 definitely, but with somewhere between 7 and 8 for the succeeding quarters. And depending, of course, on the new policies that the new administration will be introducing when they come to power.
Sir, can you clarify why you don't think that this level of growth is sustainable in the next few quarters? Of course, the prices of oil that kicked in possibly in the second quarter, but we also have the reopening of the economy and hopefully the more spending compared to the Omicron-driven lockdowns that we had in the first quarter.
Okay, your base first quarter 2021 was really low, Danny. In fact, if you look at a quarter-on-quarter growth, for example, you compare fourth quarter 2021 to first quarter 2022, your growth is about 1.9%. So, if that was a lot higher, then maybe we can call that sustainable. But, as your second, third quarter show higher bases, that growth percentage growth will be lower. But, I think the positive sign there is that it's still decent growth. I think we'll still be posting above 6.5%-7%.
Well,
go ahead.
Do you think, Sir Manny, given that as well, is it achievable for us to at least get that target by the government at 7 to 9%? Or maybe if not, at least at 6%. Of course, you have Finance Secretary Sonny Dominguez saying that we need to grow at least 6% in the next 5 to 6 years in order for us to grow out of our pandemic-induced debt.
But I'll call it what we can see up until the second quarter, because third quarter, fourth quarter, that will be your new administration, and we'd like to see what the new policies the new administration will be bringing to the table. But I think it's easy to look at above the 6% growth that Secretary Dominguez was looking at for the second quarter.
Okay, sir, why is our debt to GDP ratio continuing to balloon here, especially as we are supposed to be growing at higher levels? Why is that not the GDP, the denominator should be at least going higher, no?
Yes. Again, debt accelerated because of the pandemic, and revenues slowed down quite a bit when we posted negative growth in 2020, portions of 2021. So we're just recovering our, shall we say, our GDP side of the GDP to debt ratio is still catching up. There are a few things that we hope the next administration will do to address this. And maybe one practical thing is really on the revenue side, no? An easy fix or a quick fix, and I'll maybe offer unsolicited advice here, is that if the new administration, because of they're new, they're coming in, etc., if they offer a tax amnesty to front load revenues under their new administration, that helps the shore up the coffers right away.
Mm-hmm. Speaking of which, Sir Manny, what other areas do you think that the government has room to actually slap taxes on? If ever jacking up taxes is on the table as a possible solution to at least address this increasing debt to GDP ratio?
Yes, I think there are too many taxes already. I think it's enforcing collection of taxes that becomes more important. Enforcing the tax rules that are there already. We're a heavily taxed nation. I think the the revenue agency should enforce tax collection rather than imposing new taxes and affecting the rest of us. Yeah.
Sir, we've also heard from some economists saying that taxation will not be enough for this administration and there might be a need to sell some government assets. Do you agree with that? And if so, what type of assets will there be an increased privatization?
Well, PPP should continue to be an agenda, not so much to increase revenues, no, but rather save on government, allow the government not to borrow on its own for spending for infrastructure. That, if government passes that burden of debt, facing debt out to the private sector, we should be okay. What else? As far as government assets for sale, yes, if there are any feasible ones, but I would time it when, maybe when things are a little bit, it's hard to do difficult to do a sale right now. It'll be at fire sale prices, and buyers that have cash will be the ones that benefit. Hopefully, government has enough, shall we say, holding power to maybe time it if, for these government assets.
Money in the coffers.
Lastly, sir, in the near term, one thing we have to be keeping an eye on how the BSP will be moving next week. I mean, of course, high level of growth coupled with high level of inflation here. Is this a perfect scenario for them to finally take action?
Yeah. Well, okay, don't be surprised if they do a rate hike next week. Don't be surprised if it's 50 bips.
50 bips next
50
week.
bips.
All
Okay.
right. Very interesting insights, sir. And we'll get back to you later on, Sir Manny, to comment on the markets. That was, of course, Manny Ocampo, Managing Director of ICCP.
Thank you.
Now, groups from the banking industry hope that the incoming administration can ensure that the fiscal system will remain stable by addressing key economic concerns. The Bankers Association of the Philippines says these concerns include geopolitical uncertainties, rising inflation, and lingering effects of the pandemic. The Chamber of Thrift Banks, meanwhile, said that they are still waiting for the next administration's plans for the economy. For its part, the Rural Bankers Association of the Philippines expects the new administration to pursue programs that will boost financial inclusion in rural areas.
Now, world leaders and their representatives have congratulated the Philippines for the recently concluded national polls. U.S. President Joe Biden congratulated Bongbong Marcos for leading the 2022 elections. Biden told Marcos Jr. that he anticipates improved relations with the Philippines on key issues, including human rights. For his part, the presumptive president assured Biden that the country regards the U.S. as an ally and partner. Meanwhile, the Chinese ambassador to the Philippines said Beijing is looking forward to working with the next Philippine president. Huang Xilian is also confident that the relationship between Beijing and Manila will further strengthen under a Marcos administration. Canada's ambassador to the Philippines has likewise congratulated the country for the conduct of the 2022 elections. Australian ambassador to the Philippines, Stephen Robinson, says their government is also looking forward to working with our newly elected leaders. The ambassador of Japan in the Philippines, Koshikawa Kazuhiko, meanwhile, says he is honored to have witnessed the country's latest exercise of democracy.
Fitch Ratings says the incoming administration must continue focusing on infrastructure to help drive post-pandemic growth. Fitch also emphasized that the Marcos Jr. administration needs to ensure investment efficiency to avoid, quote, diluting the positive effect of investment on productivity growth. The debt watcher also warned a reversal in tax reforms, particularly the rice tariffication law, which could heighten the possibility of a ratings downgrade as well as hurt tax revenue. Pausing for a quick break, but coming right up after that, we'll take a look at Dennis Uy stocks after the Davao businessman is reportedly clearing his portfolio.
More of that and other stories when Business World Live returns. Stay with us.
you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
Now, from the man with the golden touch to a man who needs to sell assets, Dennis Uy is clearing out his portfolio. What is up for grabs there, Dan?
Well, Jess, I have to caveat that this is from Reuters. It's also Bloomberg and some exclusive sources that have not yet been confirmed. But as you mentioned, they did report that Dennis Uy is eyeing to sell assets, including Malampaya gas field. They bought that, of course, from Chevron and Shell for $1 billion. He's also looking at, according to sources, selling Clark Global City, which he also bought for $1 billion. And others are saying that he might also look into buying or selling, or buyers are looking into him selling Phoenix, Dito Telecom, schools, and food businesses. Now, it's not immediately clear why Dennis Uy, which contributed the top or the most to the campaign of President Duterte in 2016, is putting all of these assets up for sale. But that is what is happening. And you can see on my right side here, Dito Telecom immediately down by 1.9%. You've also got Phoenix, that is actually up by 0.4% this morning. But you can see that year to date, it's also gone pretty low, especially since he's been touted as looking at other assets for sale. And who might be buying this, Jess? Well, one in the, pipeline might actually be billionaire Enrique Razon. Now recall that he has also bought the stake in PH Resorts. And, Razon seems to be still on a buying streak. Let's take a quick check at Bloomberry. First of all, that's up by 1.7%. The past 3 days, it's up by 7.4%. But there is also an announcement by Manila Water, which is, of course, majority owned by the billionaire, increasing a stake in a venture in Cebu province of Metro Pacific, and that will increase the stake to 51%. So again, quite a lot of things going on. Dennis Uy selling some assets, Razon gobbling some assets up. Now let's bring back Manny Ocampo here to comment on how all of these issues are coming together, but also importantly on the levels of our index. Manny, just to show our viewers here, we've got our index finally recovering after that sell-off that we saw since Tuesday. Tell us what is going on here. What was the sentiment? Is this sentiment driven from the election results? Is this driven by offshore issues? Help us to make sense of all of this.
Unfortunately, it's a confluence of events that are maybe affecting the market on the downside. As you know, it's sentiment, or I'll call it even emotions that drive market sentiment sometimes. So we'll see. I guess people are still maybe trying to accept the election results, number one. Number two, I think people are still trying to make sense of what happens outside, Ukraine, the Russia-Ukraine impact, U.S. interest rates going up, our own interest rates, almost a foregone conclusion that they will go up, and the impact on the equity market. So I think all the negatives are coming out. Market is taking this in stride, and we'll see. At some point, the market will probably realize that all of the bad news has been factored in, and maybe time to take a look at strategically, like what Mr. Razon is doing, acquire or take positions in companies that offer long-term growth prospects despite all the bad news coming out.
Okay, sir, so as you mentioned, confluence of events, no? So medyo mahirap to say, but it's safe to say that this was possibly the most polarizing elections we had. But at the same time, the surveys had already pointed out to a clear Marcos victory, which indeed happened. Just to understand, why were the markets not pricing in this victory already ahead of time? Why was there still quite a reaction, and not just on election results day, but a persistent reaction wherein we were actually, despite the fact that the rest of the global stocks were being sold off, we were still at the bottom of the rung of Asian stocks?
Yeah. Well, one thing there, Danny, is that uh, shall we say, people that were more involved in the market, no, were hopeful, maybe for a different outcome. But I think let's take a cold hard look at the numbers. Mr. Marcos gaining third. It's a and even PPCRB seems to be indicating that the numbers are correct, at least from their initial tally, no, and so it's a big margin, and it gives Mr. Marcos a clear mandate. It's not, if the numbers were close, maybe we would probably be in a worse position than where we are.
Okay.
But I think people, sectors are beginning to accept. Fine, maybe there's a question about here and there, but the numbers speak for themselves.
Okay, sir, let's talk about the sectors to be watching out for here after the smoke is cleared and perhaps the sentiments, emotions are, subside a little bit. What we saw, of course, during the election day, Araneta stocks jumping, media stocks being sold off. But what really are the key sectors to be watching out for, do you believe, especially as they lay out their economic plans?
Sure. Okay, one sector we'll continue to be taking a look at would be energy, because as a nation we'll continue to build up. We will continue to use up energy, and we like companies that are what we call fossil fuel replacements. So renewable energy, energy companies that are focused on renewables, etc. We like that very much. And we hope the new administration will continue to provide incentives to this sector. That fossil fuel replacement, so we decrease our dependence on imported oil. If EVs ever find their way to the Philippines, I think we should maybe provide incentives by way of lower excise taxes on these vehicles, just to save up on these things.
Okay, so energy, renewable energy in particular. And before we let you go, just a comment. Of course, we don't want to speculate on the Dennis Uy situation, but any idea or any intel why this comes amid a new administration? Perhaps we do know that he is a staunch supporter and ally of President Duterte. Does this have anything to do with the assets up for sale?
I think it's a rationalization also of Mr. Uy's portfolio, and maybe wanting to address, it's been out in the papers anyway, Danny, that there are debt obligations that he would need to settle. So one way to do that is really to generate cash to pay off debts, and really one way for him to generate cash in the near to medium term would be to sell off non-strategic assets in his portfolio.
All right. So, of course, like you mentioned, confluence then of events, there has been, they took a big hit as well during the past 2 years of COVID. It's all just coming on and coming out as well today. Thank you so much for all of your insights throughout our show. That was, of course, Manny Ocampo of ICCP.
All right, definitely lots of things which happened this week. We all deserve that rest finally. And of course, the best way to cap off this week would be a win by UP later tonight. That's a first look into the business day this Friday, May 13, 2022. I'm not going to give you a chance to banter there, Dan. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
Jess, the color of your outfit speaks for itself, and where your
the best team from
loyalties
Diliman
really
win tonight.
lie. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. Go Ateneo, we are One News.